Let me start my tax way. Good evening, NRIs. There are no NRIs? We'll lift a hand and say, good evening, NRIs. There is only one. Good evening, RIs. Good evening, PIOs. Good evening, OCIs. If you don't know any of these categories, then income tax will make you NRIPs. Not RIPs, NRIPs. They never allow you to rest in peace. So I am here to give insight into the income tax. We got blessings from Cardinal. I think Father Anthony empowered us how to start an organization, how to empower people. Further, Mr. Dondi formed our company and said legally how you can plan it. Mr. Pace gave us the route to success, and morning Claudius said, wake up, sky is not the limit. Then we had bankers who gave us money also. Did anybody receive money? You will receive soon. Then we had already earned profits. Just now we completed the session, we earned the profits. Now they asked Mark to give salvation. Not salvation, taxation. So I am here, dear friends, to share that a businessman has to have a domain knowledge of all the taxes what is applicable. Now let me just quiz you for a few things, how you are aware. I'll ask you a question, what are you doing? Are you doing business? Then which tax do you pay? Are you doing business? Which tax do you pay? Any businessman? No tax you pay. You pay professional tax. You start business, first they'll ask you, business is your profession, start with the profession tax. Then someone asks you, what are you doing in business? Are you selling goods? Which tax do you pay? VAT, sales tax. From where are you getting your goods? Other states or abroad? Which tax you pay? CST. Abroad? You are already having domain knowledge. So I think I should close my session fast because I have to catch my flight. Where are you manufacturing goods? In the factory? What do you pay? Excise. If you manufacture goods, you have to pay excise. Do you have a warehouse or a facility? What tax do you pay? Do you have a warehouse or a facility or a building? What tax you pay? Municipal tax. Do you have staff? What tax do you pay? Again, staff professional tax. Don't just quote me wrong. These are the things which are impacting every businessman. Doing business in millions or in lakhs, you pay turnover tax. Fortunately, that cash withdrawal tax is gone. If you have drawn more than 25,000 in cash, then you pay. You would have lost. How many of you are aware that cash transaction tax was there? You draw more than 25,000, you pay cash transaction tax. Now it is luckily not there. You got sick and you want to take your client for lunch or dinner. What do you pay? Entertainment tax. Are you going out of town? You pay fringe benefit tax. Fortunately, that also has been withdrawn because every travel you pay fringe benefit tax. Have you given any service? You pay service tax. How come you got such big amount, a gift on your birthday? There is no gift tax. There is again income tax on gifts. I will touch more about it. Many of you are happily receiving gifts during your birthday. You stop receiving after that. Now to reduce tension, you go for an entertainment. Where you go? For a theatre or a cinema. Then you pay again entertainment tax. Have you purchased a house recently? What tax do you pay? When you purchase a property, stamp duty, registration, VAT, works contract. How do you travel? By bus, then pay surcharge. Any other additional tax which are left out? Already covered. Any other tax? If you don't pay tax or there are more additional taxes, you pay educational cess. What are the other? Higher education cess. There's so many taxes, and if I want to sit and cover all these taxes, I think we will have another day's conference. So friends, with this, let me start my session, where before I proceed, let me just share a small story that why domain knowledge is important. There was a family with one kid. One day, the mother was out, and you know how dad was in charge of the kid. So someone had given a gift of tea set to the kid. You know all this kids tea set you get. And it was his favorite toy. Daddy was in the living room, and you know how the dads, when you take care of the kid is alone and the dads are watching TV or reading paper. As usual, he was doing his own work, the kid was doing its own work. So the kid started serving tea to the dad, and the dad was very happy. The kid was going upstairs, bringing down with a teacup, and the dad was sipping happily. And he would have sipped at least 10 or 15 small cups. And he was praising, "It is very yummy, my darling." So, as he was sipping, the mother came in. And he told, "Look how our son is serving us tea." And she knew that he is definitely going to come down because he was waiting. She was waiting. So he came with a cup of tea, and then he drank in front of her, and then she knew. Now there is a twist. She says to him, "Did it ever occur to you that the only place that a baby can reach to get water is the toilet?" So what is the moral of the story? Moral of the story is, mother knows everything. Moral of the story is that domain knowledge is very important. How many of you are sipping the tea without knowing what is that. So I would like all of you to sip the tea knowing that what exactly is it contains. So I mean that you should know and you should be clear about at least the basics of what is required. So with this, let us start our session on doing taxation, doing business in India and impact on taxation. I heard enough of it. What is due to Caesar? Pay to Caesar. Are we doing it? Financial reporting standards. So that means all of us are reporting our accounts in the way international standards require us. With this, there will be lots of changes on presentation. Particularly, we are used to historical cost. MBA students, historical cost. When we buy land for 1 lakh, in our book that 1 lakh rupee will remain till the business continues, because we account what we pay. But these international standards change our mindset and they say that this has to be shown on fair market value. Now what is fair market value? You must value as on date what exactly is the value, and this, it is going to be a problem because many of these assets what we are holding may not have any value and it has to be discarded. It may impact the bottom line and it may impact the taxation also. So it is other way around. Depreciation also has to be accounted. So this is one, and it is already started. All the listed companies, you have to maintain all of this, and it is soon going to spread to all, including SME sector within 2014. Now we have a direct tax code. That is, in short, it is called DTC. It has made enough noise because it started in 2009, then it went on a revised draft of 2010, and then now we are awaiting it that it may get implemented by 1st April 2012. Then there is a goods and service tax, GST. All these are going to impact all the entrepreneurs here because these are the two legislations. It will have a lot of impact on the way you do business. There is a Competition Act and there is a limited liability partnership. How many of you have got LLP here formed? One. So LLP is another avenue for you to now get into a kind of a corporate business. Now, whether LLP is better, private limited is better, we will discuss that later, because as I think Mr. Dondi said, that law is still not clear that whether that is better, this is better. I can talk on taxation angle. As on date, LLP stands better than private limited company, mainly because there is no DDT. What is DDT? Not our powder DDT, dividend distribution tax. DDT is not there for LLPs. So all other things, fortunately or unfortunately, slowly they have introduced MAT. Now what is MAT? Minimum alternative tax. That MAT has been changed to AMT. If they say MAT, they have used a different word called alternate minimum tax. Now this alternate minimum tax is introduced to LLP, with that again we will have a problem. This is what is the positive indicators. Now this is New Year gift to NRIs. Pravasiya Bharati. How many of you attended? Any NRIs attended? It was recently in Delhi. Jaipur, sorry. If you see the review, I think you will get really upset the way the review is done by a few NRIs from Canada. So one is NRIs, they got right to vote now. You can elect your own. Earlier we were electing for you. Now you can elect. There is an e-migrate project. There is a new pension and life insurance they have introduced, and a very low cost life insurance cover. Now this was a long pending demand that NRIs, when they come in, no pension, no retirement. I think it's a very good move. And the last one, This is something 3.5% on NRE. Now you are getting 10%. That is tax free. NRE interest is tax free. Now this is something very good gift, and now more than that you will get conversion rate advantage. I think all NRIs here, I see you go back and review your portfolio, and particularly those who have already invested, you can break that FD and make a renewed FD with a new interest, and this interest is repatriable. If you want money, you can take it back, and if you want to retain here, it will not have any tax. Just imagine all of us paying, if you earn 10%, we are paying 30% here, you don't pay any tax. Let me just quickly run through how do you start business. Proprietary firm, all of us are aware. How many of you are on proprietary firms here? Quite a few. I would like you to migrate to the others soon. Partnership firm, how many are there partnership firms? That means 3-4 people join together and register under Partnership Act. Company, private or public, how many are private limited companies? Plenty, excellent. Because this is what is a very common form of entity in India, and it is now quite made liberal, and the new company, revised, amended company law also has been implemented. Limited liability partnership, LLP. Now the difference between the firm and the LLP is that the liability is limited here. In case there is anything going wrong, your personal assets are not impacted. Now partnership firm, there is no difference between the firm and the partners. Both are same. So that is where that partnership firm, if one of the partner troubles you, then the entire firm may, or another partner, if he may contract on behalf of the firm and gets into problem, then it will spread to the entire firm or all the partners. So that's why LLP has been brought out. It is very simple, where you don't have to do all the statutory things like a private limited company. And I feel this was there, and in Dubai or in all the other places it is called LLC. Now here it is called LLP because we have copied it from UK. How NRIs can start business here? NRIs can open a branch office, you can have a liaison office, you can have a project office, or you can set up an 100% subsidiary or a company or an LLP. But in LLP there is a catch where one of the partners should be a resident. You cannot have all partners non-residents. Is there anything which you need to explain on this, on branch office, liaison office, project office? Because last time when we visited Dubai, many of them were interested to start their business here. Now you can have a company there and you can open a branch here. You can open a company, you have a company, you can have a liaison office cannot deposit any money from the local sources. It has to send it back there only. But you can remit money here and you can only spend. You cannot bill from here. Project office is all those construction or any software, or if you want to execute project, that means they send only workers so that only their salary is taken care. Independent company, you have to have a joint venture partner, or you can join with the existing Indian company and start business. Now all this taxation impact, branch office will be treated like a company. Liaison office and project office, since there is no income, no tax. So you can. In which case? No, in which case? Liaison office, branch office, there is no income at all because you don't bill anything. You do only an administration activity. But the moment you start billing, now there is some kind of a change in DTC which I am going to touch. So it is not going to matter because liaison office and branch office is your corporate setup there. So individually it doesn't matter because it is considered as a foreign company. It is a company which is coming in. Whether you as an NRI, you are a partner there, director there, or shareholder there, or local, it doesn't matter. Because company is coming in. This is a typical offshore investment setup. from, say, since Dubai people are there, now I'll say other jurisdiction is Dubai. Say 10 investors join there, put the fund, not directly to India, they put the fund on a tax favorable jurisdiction. Now which are the tax favorable jurisdiction? Have you heard the word treaty shopping? Treaty shopping, MBA students. What is this treaty? India has signed double taxation avoidance treaties with so many countries. So there are certain countries, for example Mauritius, there is no tax. There is no tax in Mauritius. So what you do, you have a company in Mauritius, have that fund and have an investment advisor there, and Mauritius company comes into India, so you can avoid or minimize the tax totally. So this is one of the structure where they follow. Now this structure has a limitation. This is only, all the investors are from abroad. All the investors are NRIs or maybe foreigners. Now if you want to join an Indian investor, now this is what you can go. Same structure, investors, tax favorable jurisdiction, then you come to India and form a trust. From this trust, both are investing, Indian as well as the fund. Now Indian investors are investing here, and then you have various portfolios which you can start. Now this is a typical planning people do when you come into India to reduce your tax burden. Now this is a typical scene when you want to start a private limited company. It almost takes 35 days to form a private limited company. You can form easily because all these things which can be, some things can be done simultaneously. For example, first you have to get a name and then get your memorandum and vet it. So it takes 7 days. Then it starts from presenting the required documents to the ROC. Then you have company seal has to be obtained. You have a permanent account number. Have you all got your PAN? How many of you have got PAN here? In India. PAN, permanent account number. I think looks like permanent. Without permanent account number, you will not be able to survive. They say even if you want to go and buy milk, you may have to give your PAN. They are now tracking your transactions in such a way that you need to have your PAN, and this even your company should apply your PAN, permanent account. You cannot open a bank account. You cannot just go and buy some property without PAN. So there are a lot of NRIs. Last week somebody called me up that I have got a green card. Do I have to apply for a PAN here? Because he has properties here. So when you earn taxable income in India, you have to have PAN, irrespective of whether you are a dual passport holder or a green card holder. Obtain tax account number. Now what is this tax account number? PAN, I agree, PAN. There is one more thing called TAN. Why the tax account number? TDS. Now I will come back to not TEDIOUS. So sometimes it becomes very tedious to follow this TDS. Registered, then you come under Shop and Establishment Act. Now this is their state act that you must register under Shop and Establishment. Many of you are not registering. One fine day, the sales tax department person comes, say, where is your Shop and Establishment license? Then you start paying penalty from the incorporation till you pay. So this is something many of them are not aware because nobody tells you open Shop and Establishment, but you must follow this. Then if you are selling goods, you get a VAT number. So that is called TIN number now, tax identification number. Now once GST comes, all this again has to be reworked. Then if you are doing any service, now what do you mean by service? Except lawyers, everybody is taxed. There are no lawyers here. They say one lawyer. Pardon? Yes, all of us charge the client and then pay. Nobody pays from the pocket. So you need to be careful that service tax, I will cover it specifically, let me not again dive in. register for professional tax. You have to pay professional tax of the company. You have to just again register for the firm. There is a separate professional tax registration. Then you register for employee, PF. You set up. There is some exemption there, so I am not going to touch on PF because that is again outside my topic today. Now ESIC, that is Employee State Insurance. Even educational institutions now covered under ESIC, Employee State Insurance Corporation. You have to just do that. Then if you are coming from this FIPB, that is Foreign Investment Promotion Board, or Reserve Bank, if there is anything, so you must register. So altogether it takes so many days for you to start privately. If you want to start a proprietary firm, 1 day. Just go to the bank, open the account, and then start your operation. Partnership Act, only 1 day. You can draft your partnership, so you can quickly start the business. So it depends on how you can convert your private limited company to LLP. You can convert your existing private limited company back to LLP. There is no capital gains tax. Now let us come to the Income Tax Act. Income Tax Act was formed in 1961. After 50 years, now we find Direct Tax Code. Now Direct Tax Code is amalgamation of wealth tax and security transaction tax, all these taxes which are pulled together and then made one code. So that is what. So it was first discussed in 2009. Then again there is so many representation, 1,600. I think the way the first draft was there, I think most of the entrepreneurs would have closed their business. Value of asset, not on profits. So this is something which many of the entrepreneurs objected. They got a revised draft. Unfortunately, with this revised draft, the old Income Tax Act is already coming. There is same thing has been retained in many provisions, which may be good or which may be bad, because the attempt was to simplify the taxation. Now look at this, 319 sections and 22 schedules in DTC. And the word Income Tax Act, 299 sections and 14 schedules. Is it simplified? There is more. It is like schedules are shown separately, sections are shown separately. Of course, it is good to read. Only thing for students, you have to revise again. For chartered accountants, we have to study again. So this is a new law. It is still unborn. You don't know whether birth date is 1/4/2012. But in all probability, I think they will implement this by 2012. But let's wait. That is what. Now let's come a simple question. Who should pay tax in India? Every person resident in India must pay tax on his global income. Every person resident in India must pay. So what is the word there? Resident. Now this is the problem where who is a resident in India. So they have a simple test. First you ask, income tax is always calculated for a financial year. It starts from 1st April, ends on 31st March. So you have a 12 months period. In that 12 months period, check whether you are in India for 182 days. This is the first condition. If you don't satisfy that condition, say that you are not there for 182 days, you are there for only say 100 days. Then you come to the next condition. Whether you are present in India 60 days or more. But here there are two conditions you have to satisfy. And 365 days or more in 4 years immediately preceding the previous year. Any of these two conditions if you satisfy, you are a resident. Now all the Dubai people here, my friends, please take a diary and keep noting down how many times you have come for KE meetings, how many times you have come for Dimensions meeting. Mr. Ivan, are you listening? So this is the problem. So you need to track your, so moment you are not 60 days or more you stay, and that is not a continuous stay. It is like each time you visit it is taken, but it is from 1st April to 31st. The day of travel, the day of arrival and day of departure is excluded. So in between calculate and maintain your residential status. Now this is the problem where moment you become resident, all the income earned in Dubai is taxable in India. Because Dubai, I am giving Dubai no tax, no income tax. But US, I'll give this example later and see how it will impact. Because recently, HSBC, almost 30 crores tax, one person had to pay Indian. Have you all read in the papers? Not read? So recently it is reported because he had Indian accounts in HSBC and he is a US citizen. He is a resident in US and US is got the intelligence to track the global income if you are residing in India, because now it is very easy to track with your numbers or with your address, because all information is available on the net. Resident pays tax on global income. So don't say that I am an NRI, I do not have any taxable income. NRI pays tax on Indian income, irrespective of whether you are a resident or non-resident. Indian income, everybody pays tax. If you have a house and you are getting a rent, you have to pay tax in India. You may be a NRI or a green card holder, that doesn't matter. But you have to pay tax because source pays tax. You sell a property, I am an NRI, I have no tax. Some people come and tell, no, you have to pay tax because the income is earned in India. Income earned in India, whether you are a resident or you are a non-resident, you have to pay the tax. Non-resident pays tax only on income accrued or received in India and not on income. So that is why people are always maintaining their residential status. We in India, no planning. We have to stay in India. We can't just go out and say we are non-resident. It should be for a indefinite period. It should not be for a like touring. You go on a tour for 7 months. No, your intention to stay outside India is not permanent. So again, you cannot classify yourself as a NRI. Now this is the example. Madhuri. Now don't quote me. This name is just quoted like that. Because we are in Bollywood, you may start thinking, who is Madhuri? 34-year-old speech therapist. After spending 9 long years in US, she moved back to India in 2009 and now she lives in Pune. Started working on a contractual basis as a consultant with a US-based clinic and her payment is wired to her bank account in India. That means she is rendering a service from India to US clients. Because of the technology, she can sit in Pune and give the service. Now, is Madhuri liable to pay tax for this particular financial year, 11-12, in India or US or both? India definite, because she is a resident, because she has come back in 2009. After 2009 she has not gone, so 2011-12 whole year she is there, more than 182 days. You are a resident, you have to pay tax in India. But do you have to pay tax in US? Many of us are not aware, Indians are now earning income from US because you don't go to US. From here you are sending some newsletters, sending the IG Dubai, uploading, downloading, all those things. You have to be careful because you have to pay tax. So US also it is tax because the US there is a source-based tax. The source is from India and US withholds the tax. They call not TDS, they call withholding tax. So you have to give that. So to avoid tax in US, what you should do? Well, I'm not going to touch because there is another 15-20 minutes I have to say who's a resident in US. There is a green card test, there is a residency test. There they have still reduced. Here at least you have 4 years. They have 2 years there. So you have to be careful there. US, this Madhuri, she has to give. There is something called F89 or some form is there. I don't remember correctly the nomenclature of that. You have to give that, saying that she is a resident of India. So that is where withholding tax can be avoided. And even if she is taxed there, you can come into the double taxation avoidance and then claim the refund or claim the set-off. You can, but she will be taxed in US and she will be taxed in India, but you can claim the double taxation. Now if it is the reverse, somebody in the US is If Madhuri is in US and the clinic is in India, what happens? What happens? Same situation. Same situation. India also it is taxed. There also it is taxed. But in India, from the US, she has to give a tax residency certificate. With that, she can avoid the tax year. So there is something called TIAS. You have to just give it. So these are some of the things. Please beware that when you do business or when something is there where even students do this, so you have the tax implications, and once you get caught, then you will lose all your revenue, all your income, because the interest, penalty, all that will start. Now this is tax structure. I think we quickly go look at that. 1,80,000 rupees is now, this is assessment year. Now please don't get confused. Assessment year and previous year. Assessment year is the tax year. The previous year is the previous financial year. The year in which you are assessed is called assessment year. The income for which you are assessed is previous year. Now both are cancelled now in DTC, they call financial year. Because people are confusing when a notice comes, whether it is financial year, assessment year. Now you have 1,80,000 and see the slab up to 1,80,000, 0. Then you have a 10% slab, then 20% slab, 30% slab, and you have now super senior citizens. I don't think anybody is there. Anyone is there? Whether you are earning income? So there is. So 80 years, at least they are giving some pension now. So super senior is the new things introduced, but maybe this is a tax planning where you can give gift to father and father can invest and give it back to us. But only thing, father, you must write a will, otherwise it's a problem. The money will go to the society. So there is something called senior citizens. That age is now 65 has become 60. So you have to, for them these are called basic exemption, not 180, 250, and for women, unfortunately women are 190, 190, 190, Manmohan Singh is not listening. This is the firms and LLP. How much is the tax they are paying in India? If you are a partnership firm or LLP, tax rates are same, 30%. Then the problem is that yes, educational cess, that is something which is, killing. So rest of the things, there is no change. So this is the new introduction that 18.5% is the alternate minimum tax. This is, earlier firms were not paying, now firm also started paying that alternate minimum tax. That is, in case the book profit is less than, the taxable profit is less than the book profit. So that is where you are hit. Companies, what I call is domestic company. Domestic company means company which is established in India or controls are in India. So 30%, then you have 5%, 18.5%, that is MAT. So you have the other things like dividend distribution tax, that is 15%. Now what is this dividend distribution tax? Someone asked me during the break that Mr. Dondi said you don't pay dividend. But that what he referred is on the public limited. But all of us are having all private limited company. How many of you declare dividend in your private limited companies, in your companies? So when you declare dividend, you have to pay 30% you are paying tax on your regular profit. Again, the amount what you declared, pay again 15%. But individual, it is exempt. In the hands of the recipient, dividend is tax free. So that is why they introduced. So instead of you paying 30%, so company is paying 15%. So that is what is the tax. Now this is about gifts which I was talking. Can you receive gift? Now what is gift? Gift is any money given without any consideration. Now only gifts from relatives is exempt. Gift from relations, because this was a misuse which was done 5-6 years back. Abdullah was gifting to Albert. Sorry, I'm just, because this is what from you want to make your black, white, or white, black, all sorts of things were going on. People were receiving money because that gift was not taxed. Any gift, tax free. So income tax learned that, okay, let me also know, because most of the amendments are all because of this tax planning exercise. Now, they say you can receive anything from your relatives, father, mother, brother, sister, and again lineal ascendants. That is, you can say your brother's wife, sister-in-law, like that, direct relationship only are permitted. So you don't. And they said earlier only cash. People started buying property and then start gifting. So property was not covered. Now they are covered in kind also. So up to 50,000 you can do, but more than 50,000 it is there. And the fair market value, that property, had it been bought by you, what you would have paid, the same amount they pay, and this is 30% straight. 30% tax on gift. Gift from relatives, this is what I covered. Gift on marriage is exempt. You can receive gifts on marriage. People use this as a planning exercise where they list the names and go and deposit cash. Nobody knows the address of the person who has gifted. So these are all planning people do, but income tax may again come, marriage is again not permitted. So let us if they allow, I think all of us will do it. They are not allowing. Law doesn't allow in India. You can receive from institutions. Now, say church wants to, give. That is not treated as a gift. Because a lot of places where the church or the charitable institutions help the people, where that is not treated as a gift. So that there is an exemption. Now, when you earn income, when do you have to pay income tax? Don't wait for the year end. You have to pay in installments. Now this is another problem where most of us come at the end, they have not even paid advance tax. Many cases, NRIs, they do not even know that there is something like this existing, NRIs, where you have to pay. Now if your tax liability is more than 10,000, less than 10,000, you don't have to pay advance tax, you can pay tax on the date of filing return. So there is no implication. Moment it is more than 10,000 rupees, 15th June, that is for companies, 15% of your tax due you have to pay. Then up to 45%, then up to 75%, and then 100% by 15 March. How do you pay by 15 March? You are not even closed your year. You have to estimate and pay. And if you don't pay, 1% per annum interest, and again there is something called delay in payment and shortage in payment. Both you will attract the tax. Now this is what the DTC is going to be. The DTC suggests that the new slab up to 2 lakhs rupees is nil, and that slab is 2 lakhs to 5 lakhs. That is, slightly changed now because of that 180. Then 5 lakhs to 10 lakhs, you pay 20. Now up to 10 lakhs they made 20. Earlier it was only up to 8 lakhs. So above 10 lakhs you pay 30. So those who are above 10 lakhs, I don't think there will be any impact. So there is hardly any savings. They are planning to have the due dates for the return, non-business, June, and all the others by August. Now when we file the returns means go and submit your papers to income tax. Companies, when do they file? 30th September. And all the salaried people, 31st July. Now that is going to change if DTC is going to come. Firms, AOPs, all will be taxed at 30% without any exemption. That is. The third one is little bit disturbing. Non-profit organizations, first time it is going to come under tax. Now what is non-profit organization? Those who do not make profit, that means those who do not distribute. NPOs will be brought under tax in DTC. That is, if you earn 100 rupees, you have to spend the entire 100 rupees. Church is out of it. A public religious house is out. All the others will get into profit, including educational institutions. Just imagine you have received 1 crore in the month of March. How are you going to spend? There is a lot of difficulties where a charitable institution is going to face. So please plan it. There is another problem in NPOs. I have not covered NPOs because I don't think there are any NPOs, non-profit organization trusts. So I think you need to be careful. You have to start preparing. Check whether you have any trade or commerce related activities. Now what is trade and commerce? My time is already nearing, so I think we can take on if the question and answer is there. So where you need to be careful, you have to pay 15% tax on the surplus. So please be careful. Now, if you earn 100, you spend 85, then there is no tax. And if you don't spend 85, you can accumulate for next 5 years. The end of 5th year, if you don't spend, there would have tax. So you had some problem. Now, if a church wants to put up a building, when they want to accumulate funds, you will get into problem. The church receives a foreign contribution, then you will have problems. You have a corpus fund, you will have problems. So there are a lot of issues which are going to come. Now let's quickly see what is income under, how income tax identifies income. Now the DTC says income from employment. Anybody has doubt on this? What is this? Income from employment. Earlier it was called income from salaries. They have changed the word income from employment. So all those who work, income from house property, income from business, capital gains, and income from residuary sources, and there are special sources. So we will touch on each of these income. Is it legal to plan your taxes? You can always plan your taxes. So don't avoid taxes. What is tax planning? That you can avail all the benefits, you can avail all the deductions, you can always avail the benefits of the loopholes of taxation. So these are the things which you have to say. What is black money? Color is black. What is the black money? Recently, Swiss has reported black money. Money which is counted but not accounted. So this is the vague definition of black money, but of course, this is something where money which doesn't suffer tax, so that you don't declare that money to income tax, it becomes black money for income tax. Look at one of the accountant, how he was planning his things. He writes expenses of his daughter's marriage as security expenses. Don't do this kind of planning, because these are all personal expenditure. There is more interesting. He writes expenses on funeral of his first wife as packing and forwarding charges. Income tax officer will not have any doubts. He writes the expenses of his second marriage as renewal of license fees. These are all, sometimes, don't laugh. I think many times you may also do it. He writes expenses of his daughter's delivery as production bonus. His second wife broke the wall of neighbor's house while learning driving. He wrote it as research and development. Now this is not the kind of planning, because a lot of us book the expenses. Expenditure is something else, then you will not sleep peacefully, because income tax is something called scrutiny. They call all your information, start checking, and one assessment I had, in front of me is calling the supplier by looking at that invoice phone number. And that man has different invoice, and this invoice is different. Lot of cases where income tax is going to catch, so don't get into this kind of problem. Now we are all Christian entrepreneurs. I think the message is very clear that we need to hold our head high. I am not going to touch on employment because there is not much changes, only LTC. You can't take leave now. LTC is taxable. HRA is taxable. So that's the only major change. Income from house property. Anybody earns rent from letting out of your house, you will have to pay tax. Now, what is the change there? Earlier, that house, what is going to fetch? Even if it is not let out, what is going to fetch? They will calculate, it is called annual lettable value. Whether you let it out or not, that value was created. Now they say only actual rent received, and then interest on housing loan is retained. So there is a two category. If you are occupying your own house and then you are borrowing, your restriction is 1,50,000. And if you are letting out your house and then paying interest, there is no limit. So this is something. Are you all aware? when you have two houses, only one house is occupied, the other one house is not let out. Do you know that now you have to pay tax on that house which you are not let out? That is called to be deemed rent. It is applicable for this financial year. Fortunately, DTC, they have left out. So many of them are not aware. Bombay one house, Bangalore one house, any other place? Dubai. Dubai anyway, it is not coming. So you need to be careful where if your house is left vacant, only one house you can deem to be self-occupied, even that you can take. But the other house, you have to pay tax on a notional rent. So this is something which you have to be very careful, and there is a difference between that business and all. Let me not touch capital gain. Pardon? Now capital gain. What is capital gain? I have got lots and lots of queries during the break on capital gains. What is capital gain? Any gain you earn from selling of your property. Property includes shares. Now shares is the one, I think all Mumbai people are dealing in shares. They are morning till evening, they are in the share market. So you have to listen carefully. There is long term and short term. Now what is long term and short term? Now anything which is more than 36 months, it is long term, and less than 36 months it is short term. Exception is shares. Shares is 12 months. Now that long term, short term is gone, so only 12 months. All assets 12 months. Now any gains other than shares will not have that 20% tax. It will be taxed as a regular income, so you will get into, if you are a 10% bracket, you will get 10%. If you are 30% bracket, you will pay 30%. This is going to have a lot of impact. Of course, you can save by reinvesting in a residential house, or you can put in capital gain. All those things are there. But in case you want to pay tax, now you are non-resident, 30%. Because there is, any person sells the house to a non-resident, sells the house to a resident here, resident is supposed to deduct tax. There is a notice which has come last week for me, where one of our clients sold, he is an NRI. His buyer got a notice that you have not deducted the tax, please pay the tax. On his income you have to pay tax. So please be careful where you have to. Shares, it is long-term shares, it is exempt, and then more than 12 months listed shares through stock exchange, it is exempt, and the other short term also, earlier it was 15%, now on the gain you are reduced to 50%, and on 50% it is taxed. These are all tax structure which we can see. Capital gains, board's tax structure. Income from business, there are lots of changes which I think I am not going to touch on. The only thing is that the third point, non-moving creditors for more than 5 years. If you have creditors in your book for more than 5 years, you are in trouble, because that is deemed to be income. A lot of people have fictitious creditors, planned creditors, they will never repay. So income tax, earlier it was 3 years proposed, now they have increased to 5 years. So any long pending creditor or a genuine creditor which you don't pay, it will be treated as income. Other things, let us not, and that is non-compete fees and all those things are introduced where you cannot, if you pay non-compete fees, you can't write off, you have to write in 6 installments. So there are a lot of changes where they have done. Corporate taxation, I already covered. Only a foreign company have branch profit tax. So this is another change there. And MAT, all those things which we have discussed. Wealth tax. This is, how many of you pay wealth tax? You don't know what is wealth. You have to pay wealth tax if you have wealth. Earlier it was 30 lakhs. Now it is increased to 1 crore. If your wealth includes residential house, properties, bank account, investments, all artifacts, everything put together, there is a valuation method. If it exceeds, you pay tax. There is 1% tax that has been introduced. If you have a watch more than 50,000, that also comes. That is a new addition. International taxation, I think we will skip, because this is not going to impact, because this is something which they call controlled foreign corporation. If any resident in India running business outside India, controlling here, that profit will be taxed to. That is called CFC. Many of them run, they don't bring money at all. If there is any money remaining there beyond 5 years, it is deemed taxation. I have already explained to you that SCs are brought under PAT. TDS rates already covered. Indirect tax, service tax. Service tax is based on accrual basis now. I think it is a wrong slide. I think it should have been why this Kolaveri, not D. Why this Kolaveri DTC? This is the
Kolaveri DTC. Why this Kolaveri DTC? Why this Kolaveri DTC? Why this Ajit? White means tax, black means trouble max. Pay your tax and relax. Why this Kolaveri DTC? Why this Kolaveri
Sorry, it is not my voice. I thank Naveen. I think he is from KE Bangalore. I asked him just to put a tune. Composer is mine. I have composed it. Thank you, ladies and gentlemen, and thank KE and Dimensions for this lovely opportunity to be with you and share my experience on income tax and other laws. Thank you.
Well, ladies and gentlemen, definitely we had a very inspiring session, and we would like Ms. Veronica Paul to give Mr. D'Souza a lovely token of our appreciation.